Hello everyone, how's it going? I hope that you're having a wonderful time and a great run in the market at the moment. Now, in today's video, we're going to talk about the Schwab US Dividend ETF trading under the ticker symbol SCHD. It holds a significant appeal amongst retail investors due to the combinations of high yield, low exposure, and very reasonable fees. It provides a diversified dividend portfolio in a single click, making it a preferred choice for many. In recent years, the job market has become more uncertain and the inflation has impacted economies that were previously deflationary. Amidst these uncertainties, it became essential for us to secure our own financial future and to take things in our own hand. To achieve this, it's crucial to identify stable revenue streams that can distribute dividends and provide a shield against the market volatilities. For many investors, SCHD has been considered for a very long time as one such opportunity. It goes beyond being just another dividend ETF. It's now regarded as the symbol of a safe haven for both retail and institutional investors. Known for delivering stable and growing dividends, SCHD stands out as one of the largest and most diversified dividend ETFs in the market, maintaining its popularity. So in today's video, we will dive into a comprehensive analysis of SCHD to help you determine whether it should be put in your own portfolio. Before today's video continues, I want to take a moment to thank each and every one of you for clicking on my video and to visit my channel. Hopefully you will get something out of this and you will enjoy your stay. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of the companies that I cover. With that being said, I hope you're going to enjoy my analysis, and let's get started. In the short term, it seems like SCHD has made it clear that, upward is the way to go, no matter how slow things might seem to be. It recently reached a high of $81 and a low of $80.40. These fluctuations illustrate the volatilities inherent in short-term price movements and indicate the range within which SCHD has been trading. Over the past 5 days, SCHD has shown a moderate upward trend, with prices increasing by approximately 1%. This trend suggests that the ETF has really experienced some significant growth, especially following March 27th. While the increase is relatively modest, it does signify a positive momentum in the short term. Now, when we look at the 30 days, the 30 days trend, it shows a much more pronounced upward trajectory, with the prices rising by 4%. And during this period of time, SCHD has managed to surpass the $80 resistance level, indicating a strengthened bullish sentiment amongst investors. This upward movement underscores the ETF's resilience and the potential for growth over the medium term. Looking back over the past 6 months, SCHD has demonstrated a consistently bullish trend, with prices increasing by almost 15% during that period of time. And this sustained upward movement reflects the investor's confidence into the ETF's underlying assets and the investment strategy. The significant growth over this period of time really highlights the ETF's ability to deliver favorable returns to investors seeking exposure to dividend-paying stocks. Now, recent trading volume suggests that it's quite stable, like the daily volume would be between 3 to 4 million shares, with an average volume of 3.5 million shares. This suggests that a very stable level of trading activity occurs over time, and that while it can still fluctuate, the consistency indicates the ongoing interest unchanged. And overall, the recent price actions in SCHD has seen a very bullish tendency to it, and characterized by a slow and consistent growth. In fact, if anything, just like we've said before, it grew by almost 15% over a period of 6 months. Well, that is not necessarily just a little for something like SCHD, because we have to keep in mind that it is for dividend ETF, right? And dividend stocks to increase by like 15% is quite significant. So the short-term price action of SCHD does reflect its performance over the recent periods and indicates a trend of moderate to significant growth. With prices steadily increasing over the past 30 days and even the past 6 months, SCHD has demonstrated its resilience and potential for delivering favorable returns for investors. While recent trading volume remains relatively stable, bullish price actions suggest that SCHD may continue its upward trajectory in the short term, especially in a low interest rate environment. As always, investors should conduct their own research and to consider their investment objectives before making any decisions regarding the SCHD and also other kind of like ETFs purchases. So in terms of options activities, what we're seeing right now is that the call option strike prices typically range between $79 and $82. These call options give investors the right, but not the obligation, to buy shares of SCHD at a specific price before a specific expiration date. Conversely, the key strike prices for put options generally range between $78 to $80. Put options give the investors the right to sell shares at a predetermined strike price within a specific time frame. Options serve as useful tools for the market sentiment examination, and in the case of SCHD, the options market reflects a split sentiment. So still a lot of people anticipate the bullish trend to continue, but as time goes on, obviously the longer this stock has been growing, the more people anticipate some sort of pullback, to say the least. Now, despite the predominantly bullish sentiment, there are some doubts amongst investors about the sustainability of SCHD's upward trend, which is only natural, right? Because no one is going to hold any sort of stock forever without taking some profit from it. While the ETF has experienced significant growth, there are some concerns about how long the bullish momentum can be maintained. And these doubts may stem from factors like market volatilities, the economic uncertainties, or the potential changes in the interest rates. Now, overall, the options activities surrounding SCHD provide valuable insights into investors' sentiment and expectations. There's some confidence in SCHD's continued success and also some concerns about the potential of reversal. So with that being said, let's take a quick step back and to look at SCHD as a whole. So it is an exchange-traded fund that was launched in 2011, offering investors the exposure for a diversified portfolio of the US dividend-paying stocks. Ever since its inception, SCHD has garnered significant attention from investors because of its very attractive features and performance metrics. Because as of the latest data available, what we see is that SCHD boasts a total asset under management of almost $57 billion, indicating its popularity amongst investors seeking exposure to dividend-paying stocks within the US equity market, which is also one of the best and most resilient capital markets in the world with the deepest pools available. This substantial AUM reflects the confidence that people have placed into SCHD for a variety of reasons, seeking returns, seeking safe havens, expecting the interest rates to cut so that the stocks can gain in value and so on. So one of the things that is really exceptional about SCHD is its low expense ratio, currently at a 0.06%. This low ratio is very appealing for investors who want to minimize the drag on returns over time, because much like your returns, the expenses will also go exponentially higher over time because they're also compounded depending on how many years you hold such and such investment. So SCHD's portfolio has a grand total of 104 companies, providing investors with a very broad exposure to various sectors and industries within the US equity market. Now, mind you, this is 104 companies that distribute dividends, not necessarily just 104 companies that are large caps. And this diversification helps to spread risks across different companies and sectors, reducing the impact of any individual stock's performance on the overall portfolio. The yield offered by SCHD is another attractive feature for income-oriented investors, currently standing at 3.5%. And this yield represents the annual income generated by the portfolio's dividend-paying stocks relative to the fund's share price. The consistent income stream provided by SCHD's dividend payments can appeal to investors seeking reliable sources of income, and in fact, quite attractive dividend yield on top of that. Now, one noticeable aspect of SCHD's performance history is its the price appreciation record over the course of its existence, really. On average, SCHD has experienced a yearly price increase of approximately 10%. That's regardless of how much dividend yield it has. The price of the ETF has increased by 10% on a yearly basis, demonstrating its ability to deliver capital appreciation to investors over the long term. And when considering both dividend yield and price appreciation, investors holding SCHD have historically enjoyed a total yield of around 15% a year. This is a very attractive total yield, which underscores the potential for SCHD to generate valuable and very favorable returns for investors who seek both income and capital growth. Regarding the investment strategy, SCHD has a pretty straightforward approach, which can be viewed essentially as an S&P 500 index fund with cash flows. And the fund aims to replicate the performance of S&P 500 index while also emphasizing on the dividend-paying stocks aspect of things. This approach does provide investors with exposures to the broader US equity market while also targeting companies with a history of consistent dividend payments. So one characteristic of SCHD is its tendency to rise with the tide, meaning that it tends to perform well during periods of overall market growth. This characteristic can be appealing to investors seeking exposure to the broader equity market while also benefiting from the income generated by the dividend-paying stocks. Now, with that being said, it's also very important to note that SCHD's performance may be influenced by the interest rate fluctuations as well. As interest rates rise and fall, the attractiveness of dividend-paying stocks relative to other investment options may change. In other words, if it falls, then SCHD's appeal will become much higher amongst the investment community. And the SCHD ETF offers investors a compelling investment opportunity with its low expense ratio, a very diversified portfolio, a pretty attractive dividend yield, and a very solid performance history. Now, SCHD really appeals to those seeking both income and capital appreciation, and also a sense of stability in their portfolio. Obviously, you should be careful considering these investment objectives and also the risk tolerance before investing into SCHD, just like with any sort of investment vehicle. Now, Schwab's SCHD is a dividend exchange traded fund that has gained popularity amongst investors seeking reliable income streams. It is launched by Charles Schwab, and it offers a pretty convenient way for investors to access a diversified portfolio of companies with robust cash flows. So, a dividend ETF like SCHD essentially brings together a collection of companies known for their strong dividend-paying histories and how solid they are from a fundamental perspective. By investing into SCHD, people can basically acquire shares of hundreds of companies in a single transaction, which provides a simplified approach in building a pretty diversified portfolio that is also seeking stability. So instead of looking for hundreds of individual stocks, analyzing financial reports and ratios and so on, SCHD scans through the market for you and allows you to buy, both stability, growth, and income just in one go. Now, it's definitely one of the main reasons why SCHD has been popular with investors, especially the retail ones, is the yield. The fund's emphasis on companies with consistent and growth has contributed to like a pretty reliable source to those seeking regular returns. And additionally, the ETF's broad exposure to various sectors ensures a well-diversified investment strategy, which reduces the risk associated with individual selection. This approach is very healthy in the long run because we may all have an idea about which sector is popular at the moment. In the long run, things definitely tend to even out, right? And this is why I would say that it's very healthy to have SCHD to do this work for you so that you don't have to go in with a much more subjective approach in stock picking. The safety in number is definitely something that's important, and the diversity of these holdings act as a protective measure, helping to mitigate the impact or poor performance from any individual sector or company. The investors would benefit from the resilience provided by a basket of stocks, making SCHD a pretty attractive option to those prioritizing stability in their investments. And also, when you compare SCHD with S&P 500, it's kind of interesting to look at like the overall price action evolution, because while both include many of the same companies, SCHD's focus on like maybe more the mature companies on the S&P 500 definitely makes it a relatively safer option. This emphasis on the income generation provides a unique angle compared to the broader market, potentially appealing to like investors seeking a balance between growth and stability. If we think about it, most of the stocks included, if not all of them, in the SCHD are based in US and are large caps, and are probably also included in the S&P 500 as well. To an extent, we can say that SCHD is a relatively safer and more traditional version of S&P 500, since some of the biggest companies in the world do not pay any dividends, right? So those who do also happen to be included in the SCHD. So the price action of SCHD can be justified by considering the increased capital allocation to equities over the past 15 years. As more investors recognize the importance of dividend-paying stocks in their portfolios, the demand for ETFs like SCHD has also risen. The fund's performance is also influenced by the individual success of the companies within these portfolios, further emphasizing the connection between price movements and the underlying assets. So, investors with specific goals find SCHD to be very beneficial, especially those who prioritize stability and like increased yields over just simply growth. And SCHD would align fairly well with those objectives. The emphasis on companies with strong cash flows and consistent dividend payments also caters to income-focused. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and declined quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflation. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all that, my actual approach, like the overall approach that I would suggest to everyone here, is to basically see SCHD as one of the key components of your portfolio if you're in for the long game. So, one of the standout features of SCHD is its reputation as a good dividend ETF with a stable outlook. And you need those building blocks in order to have like a portfolio that's not going to just go wildly higher or lower depending on the market volatilities, right? Because you don't want your money to be as volatile as the market can be sometimes. So dividend paying stocks are often favored for that reason. And SCHD is a pretty attractive option for those who want to like make some money while also benefiting from the rising tide. Overall, I would say that it's a pretty healthy approach to slowly build up SCHD over time, along with another few dividend ETFs, like the alternatives to SCHD, essentially. So that, the idea is that money will lose its value over time. Therefore, in comparison, in relative to that, like equities, titles, and assets will slowly rise in value as well. Especially when you think about it, like those are dividend paying stocks, right? They're not really wacky ventures that are put forth in the NASDAQ. These are much more established business presence that are likely to still be here decades from now. So chances are, if they're worth X amount of money, in 10 years, 20 years, 30 years, they're going to be worth that, but like basically the equivalent, but reflecting the inflation level by then. So this is why I would say that SCHD is definitely a good idea to be had in your portfolio. And because of its low expense, you also don't have to worry about like giving too much to the middleman. The middleman's taking 0.06%. You see what I'm saying? So I would say maybe 10 to 15% of the portfolio can be allocated to SCHD over, over at least 12 to 24 months, maybe even bigger. So set up like a set purchase schedule for SCHD. And that would be, in my opinion, the best way to go.